Good morning, guys and gals, guys and gals, gals and guys. Good morning. How the heck you doing today? Hope everybody's doing amazing. Looking at my Google screen, wondering why I'm showing the Google screen. Good morning, Cheetah. Good to see you. Jeffrey Dean, I love excellent. That's good stuff. Hey, Cheetah, did that picture that I posted, did that help a little bit on the continuation? When you think it's time for a trade, but kind of good. I love that. I'm a big fan of that look too. Um, Big fan of that look. I actually had one this morning. I was already in, but if you look, there's the exact look right there. Boom, boom. Giving you that little confirmation of the upside. So go study that one. Um, Welcome, everybody. There's 12 of you in here. That's usually about the way it goes in the morning. Excuse me. We're going to do what we do because that's how we do. It's great to see you guys in here. I'm excited. Do I have some newer users in here? Hey, good morning, Erla. I hope I do. I love the new users. I like you old folks too. Guys, every morning I check news. Every morning, pour a cup of coffee, wake up, go to forexfactory.com and say, hey, is there any news that may be impactful? And when I consider news impactful, I'm talking about medium impact. This could affect the market, make it spike a little bit, but especially high impact, guys. And one thing that I'm not doing, this is exactly how I could read news for the week. I see what time, and I look at the impact, and I say to myself, all right, right here, I'm going to choose to not be in the market. Right here on medium impact, right here on high. These are the places where I'm going to go toast a bagel, make a waffle, pet the dog, something other than jumping into a potential emotional news release. So every morning I do that. I mean, every morning. And then we get to business, guys. Every day for the first hour, this class revolves around providing you a foundation, giving you everything that you need to be successful with the software. Hey, good morning, Sid. Good to see you. And we do that each and every morning. We talk about a high probability trend trade. I changed my PowerPoint up a little bit so I wouldn't have to bounce so much. Guys, we talk about this trade, this high probability trend trade, because it only has 3 rules. And each of these rules create an advantage. And I'm telling you that the goal is to look at your charts and speak to yourself in terms of advantages. So we're going to take each of these rules, and when the advantages are true, guys, you have a trade. When the advantages are not true, guess what you don't have? A trade. And that is the easiest way in the very beginning. So we're going to keep it very simple, keep it very focused. So 3 rules, guys, for an entire hour. We're going to break them down individually. I'm going to show you how to study them. We're going to talk about what they mean to you. And we're going to turn these 3 advantages into the highest probability trend trade that you can take. And this is a trade that typically wins 70 to 80% of the time, guys. These 3 rules, again, in the spirit of simplicity, are going to come to be on only 2 charts. I see you guys coming in late. Paul Flowers, good to see you. Been a while. Guys, we're going to use a large chart and a small chart, a big and a little. The large chart is going to define the direction of the market, let you know which way you should be trading for that high probability trend trade. The large chart is going to define the momentum in the market through rule number 1, and the large chart is going to define the areas in the market through rule number 2. Once the large chart gives you your first 2 advantages, guys, we're going to go back and we're going to refine that broad stroke of a brush. You will be able to pinpoint exactly where the market is most likely to continue. Rule number 3 is designed to get you into the highest probability trend trade. And we use these 2 charts because they are very much a reflection of who you are trading with or who you are trading against, guys. The large crowd is the large chart. These are the men and women with enough money that if they want it to go up, it goes up. And if they want it to go down, it goes down. And when they establish momentum and all that good stuff, guys, give me a Y if you can hear me, please. Okay, cool. So Pete knows. Awesome. So guys, if you ever can't hear me, Do exactly what Pete did. Go, hey, Mark, I lost audio, and then I'll ask the room, can you guys hear me? And if you see like 7 or 8 yeses afterwards, yep, you need to reboot. And Pete just said that. Okay, it's me. So he'll go fix it on his end. Guys, the large chart leads the way. And these are the guys that are making decisions at key areas and establishing momentum. And then the small crowd are these yahoos that fight them. And we're going to be able to pinpoint where they typically lose their fight. This becomes your entry for the highest probability trend trade. Guys, the reason that we focus on this trade for an entire hour every morning, every day, and I kid you not, if you go back and you look at my YouTube videos for the last year, the first hour is the same hour. And it's that way because, guys, repetition is what creates confidence. Repetition is what develops the skills that you need. Very, very rarely is your desire to be a successful day trader enough to get you where you want to be. You've got to see these things. You've got to learn these things. And this high probability trend trade teaches you to read your indicators. I teach you to read your indicators. And guys, once you spend a week in the market, you're going to realize that this is true. That 90% of your day, let me see if I can, Rob. 90% of your day is going to be spent reading indicators. 90% of your day is, oh, that's my volume, hold on. There we go. How's that, Rob? I cranked it up quite a bit. 90% of your day is going to be hanging out doing nothing. 90% of your day is going to be looking for advantages. 90% of your day is not going to be in the market. 10% of your day will be capitalizing on the advantages that you see, guys. And I'm going to say this probably 100 times this week. The most successful traders that I've ever worked with in my life are the people that are capable of doing nothing when there's nothing to do, guys. So you're going to get this idea that I don't have to be in every move. I don't have to catch every dollar because 90% of my day is doing nothing. But once you're a chart reader, once you're solid at recognizing these very simple advantages, guys, you're going to understand where the market is likely to continue. This becomes your entry for the highest probability trend trade. You're going to understand where the market is likely to go. This is going to help you make targets, and then you're going to understand where the market is likely to stop. And these likely to stop areas are going to be ginormous red flags that say, don't take that next trade. The path isn't clear. So we're going to keep it real focused today. And we're going to start with learning the trigger line and the Fibonacci rules for when it's okay to trade, that high probability trend trade. And I like that it says for when it's okay to trade. I want you to really start grabbing hold of the idea that if your rules are met, it's your obligation to enter the market. And if your rules are not met, it's your obligation to sit on your hands. Your rules are patterns. That's all they are. They're patterns that have been proven to win more than they lose. You're going to prove to yourself that they win more than they lose through a little bit of study. Guys, simulate, practice. Take the trades you think you see. But here's the key. Post them in the room. Post your trades in the room. And I'm going to tell you right now, new people, you're going to make mistakes. If you don't make mistakes, then you are truly in the gifted and talented program. I still make mistakes. Everybody makes mistakes. But what's cool is when you get feedback on your mistakes, you learn how to correct them. So when you post your trades in the room, it's like a private session with me. And this is really important for you guys that are brand new in here. You're going to think, man, I don't want to post a loser. The losers are where you learn. And you're like, oh, he's going to get mad at me because I posted too many times. I will never get mad at you for posting too many times. I want you to be selfish with the time in the room. I want you to pretend like it's just the two of us. And every time you post in the room, guys, you get a private session. Eventually, you'll work your way to making sure that you're always trading the correct rules. But until you get to that point of recognition, guys, it's okay to break rules. We just need to talk about them so that we can correct the action. We will simplify. We're going to talk mainly about a high probability trend trade. High probability means that each indicator on every chart agrees for the rules for the trade. Triggers are the strongest. There's nothing in the way, nothing between you and your targets, guys. And your ability to read charts coming from this trade is going to set you up for what we call a medium probability trade. And a medium probability trade means that most of your indicators line up for a trade. However, a small issue exists. your chart reading is going to identify that issue. Your chart reading is going to allow you to manage those a little more assertively. And guys, what you're going to find is that most of the trades that you take fall into a medium probability scenario, but it's the high probability understanding that's going to allow you to manage them. So post everything in the room. You've got to know what it looks like. You've got to know what it looks like to have the rules met, to have the trade set up, because eventually it becomes easy. It slows down the market, and that's where using the spreadsheet that Nexgen gave you. Guys, this spreadsheet is in your Nexgen Study Picks folder. It gets updated every month or two, so I put mine in the room every morning because sometimes I update it a few times a day. The first tab on this sheet is your trade tracking. If you've ever been to the CME website, the one thing that they tell you is, hey, track your trades, track your progress, look at what you're doing, recognize your patterns. That's exactly what this is. This is a place for you to put every trade that you take. This is a place for you to talk about the advantages that you had, and this is a place for you to come back and read the feedback. Put it in your notes. Hey, Mark said I traded into a termination condition. Mark said don't ever miss this one. You're going to annoy the crap out of your spouse with the phrase Mark said. That's the first tab. The second tab is breaking down each of the three rules for the high probability trend trade individually so that you can see exactly what they look like on their own and eventually piece them together to create a trade. And then strong triggers, clear path, entry. Guys, that's the high probability trend trade. I'm also going to encourage you to understand what it looks like when the rules are not met, because it's so important to get in when they are met, but it's equally as important to stay out of the market if your rules aren't met, if those advantages aren't present. So that's what this does. I'm going to give you a sheet on how to fill it out, best of the best. This is your trade plan sheet. This is just where you're going to take all the pictures that appeal to you, right? Man, this setup gives me warm fuzzies. Let me put it in my trade setup. Let me learn how to manage it. Let me begin to recognize patterns. And then there's the reasons not to take trades. Guys, this blue section, once you're solid on the high probability trend trade, you're going to recognize so many things that you weren't even looking for. You're going to recognize patterns that repeat themselves. You're going to recognize patterns that are bringing you success and patterns that are taking that success from you. Every pattern you begin to recognize, drop it in the room. Let's talk about it, because chances are I've seen it too. The final tab, this is your high probability trend trade entry sequence for a short and for a long, because it's futures. Let's make money both directions, right? This is a very mechanical beginner's management plan, and then more reasons to change up your management as you become a chart reader. Almost 400 pictures of Nexgen users taking advantage of the software, being able to capitalize on the advantages that they see entering and exiting the market. Here's a whole section on patterns that repeat themselves. And then guys, there's a whole section on termination conditions. It kind of isolates them out, and it's even on two different tabs. This is the most broken rule for most Nexgen users, is trading into areas that may stop the market. I'm going to teach you how to avoid that. So we're going to learn the rules. If I'm going through a rule and you have a question, just type in the room, hey Mark, clarify. Hey Mark, will you go over that again? I promise you that I will. Simulate your trades, guys. Practice, get in there. Because simulation isn't just practicing the trades. Simulation is allowing you to move stops and targets. It's getting you to a position where you can scale your charts, where you can just get familiar with the mechanics of being in a trade. And then we're going to simplify. I'm going to give you two trades, but we're really going to focus on the first one, because the first one just opens the door for the second and every other trade. And we're going to break them down so they become easy. So this is our three rules. Before I get going, are there any questions, anything that you want to ask? And I also want to ask real quick, because it seems silly for me to tell you that the best way to get feedback, to get good at this, is to post in the room. Is everybody comfortable taking a picture, dropping it in the room before I even get into the rules? Guys, I need you to be honest with me here. It's okay. If you need help, let's do it. Because this is, you're comfortable, JK? I like it. Paul, I know you are. I've seen all your pictures. Love each and every one. Sid, did you figure it out over the weekend? Sean Patel, how we feeling? I think that's a new name for me. Sometimes I confuse new users with old users. I see Anna B. It sure is nice to see you in here. Long time no talk. Good to see you. All right, guys, I'm going to assume we're good in pictures. I'm not going to go through it. If that changes, let me know. 3 rules, that's it. 3 rules. They're either met or they're not, guys. And the first rule says that your large chart must have strong trigger lines, because strong trigger lines create momentum, the advantage of momentum, guys. So we're going to identify trend first, because you got to know which way you're trading. On the large chart, if the background is green, it's going up. And we're looking for rules to be met for high probability trend trades long. And if the background is red, it's going down, and we're looking for rules to be met for high probability trend trades short. And guys, going with the trend, going with the flow, go with the large crowd. It's typically the path of least resistance. Ah, love you back, Anna. In an uptrend, strong triggers means that your small triggers, these solid lines, and these large triggers, the dashed lines, they are separated. They are wide. There's this big gap in between the two, guys. And that gap means strength. And I'm going to get artsy-fartsy on you today. Let me find my little drawing tool here. So when I think of strong trigger lines, in my mind, I'm picturing scissors that have opened and are ready to cut, guys. Because when the scissors are open, you can get some work done. When the scissors are open, you can cut. And the same is true for a short. When the small triggers, whoops, get below the large triggers, that's why I do this in one swoop. When those scissors open, let's give it a handle, right? And I've got a gap between my triggers. Guys, this is strength. This is strong triggers. This is strong triggers, whether it's a large chart, a small chart, a range chart, a day chart, a week chart, doesn't matter. Separation between the small and large means strength, and strength means momentum, guys. And when I have momentum, the odds are favorable for the market to continue up. The odds are favorable for the market to continue down. You're going to hear odds favorable momentum each and every day. You're going to hear odds favorable momentum every time you see a successful trade, I bet. And guys, this odds favorable momentum pushes the market. And this odds favorable momentum can break key areas. And this odds favorable momentum, I love it. It can cover mistakes that we make as new users. And if you open up a chart, this is the S&P. Currently, we have odds favorable momentum to the upside. My smalls are above the large are wide, they're angled in the direction of the trend. This is a look that tells me that the odds are favorable for the market to continue up. This separation here let me know that this market was more likely to push down. And guys, this is probably the easiest lesson. Here it is on crude oil. We had strong triggers down and then a big bounce, and now we're kind of in this little indecision. The smalls are above the large. Scroll back, that's strength up, strength up, strength up, guys. Is everybody, can you give me a why if you're cool? Right now the smalls are not below the large. I don't have momentum to the downside. Here, the smalls are above the large. I have momentum to the upside, guys. Momentum is that one that I never want to do without. Momentum covers mistakes, guys. Momentum, there's people that have trading plans based solely on momentum. But when those scissors close, when the small triggers work their way back inside of the large triggers, this is a weakness of the large triggers. This is a visual representation that the trend is slowing. And guys, anything can happen up or down. So when the scissors close, and I like this analogy, when they're open, I can get some work done, right? When they close, the best I could ever hope to do with those scissors is take a stab at it. And if anything can happen up or down, why on earth am I risking my money, right? Strength, weakness, odds favorable, anything can happen. And these weak triggers, especially at key areas, you're more likely to get a big untradeable retracement. You're more likely to get a bounce. So there's 2 options. It's either strength or it's weakness, right? There's your strength. Let's see what it looked like back here. And that weakness, look at that, right at a fib. That's a big bounce that happened pretty quick. And that fib, we're about to talk about those, guys, but we're going to talk about it in regards to rule number 2. Momentum is great. I love momentum, but momentum is only a part of the equation. It's 1/3 of the equation. Once I have momentum, I have to make sure that I have a clear path. I have to make sure that termination conditions are false. There's no areas in front of me likely to stop the market. And that's going to give me room to my profit targets. Areas that may stop the market, once again, it's a large chart thing, guys. The large chart leads the way. It's going to define the areas. Horizontal lines on the large chart, easiest way to say it. If it's a horizontal line, right, running with the horizon, guys, it has the potential to stop the market. It's not guaranteed, but it definitely has the potential. And we're going to use a comparison between the trigger lines, the same trigger lines that gave us momentum or illustrated weakness, and the areas on the large chart. So we're going to use divergence high lines and divergence low lines. We're going to use Fibonacci resistance, Fibonacci support, and yellow 1-to-1s. These are areas where the large crowd are most likely to make decisions. These are areas most likely to create an untradeable bounce. These are the areas where fights may happen right in between them by the buyers and sellers. So if decisions are being made at key areas, we want price to reach the key area. And this is the first step to identifying a termination condition. If price reaches Fibonacci resistance, and remember, it can be a red fib, it can be a divergence high, it can be a yellow 1-to-1. The only thing that you guys have to do is ask yourself, where are my triggers? And if your triggers remain below resistance, guys, this is an area that may stop the market. This is an area that may create an untradeable bounce. This is an area that may reverse the market completely. And if it does, we're going to call that termination condition a strong top. And then if price is cruising down, the sellers are in control, they get to Fibonacci support, they're likely to make a decision, whether it's exit, whether the buyers are going to take over, or whether they're going to fight for a while. You and I will never know what their reaction is going to be, but if price reaches resistance and my triggers remain above, no trades into that short area. It has the potential to stop the market. And guys, remember, we don't trade absolutes. We trade patterns that have been proven to repeat themselves. We trade patterns that let us know that when price reaches an area and my triggers don't break, more often than not, it's going to ruin your forward progress, at least enough to kill your trade before maybe continuing. So let's go through and see if there's anything to these Fibonacci areas. Weakness, there's your retracement. And look at this, areas break, right? Strong triggers can break. Right to the 1-to-1s, right to resistance, right back to support, directly into resistance. Guys, you haven't had a clear path or momentum for the last 30 minutes on crude oil, which means that you are in that 90% of your day. Look at the bounce that support created. Look at the bounce straight off of resistance. Look at the divergence high, stopped it to the absolute tick. And guys, once you trust a little bit that you don't have to trade into these areas to be successful, that you don't have to be the first one in, you don't have to be the last one out, simply say to yourself, man, we've reached an area, my triggers haven't broken, there's nothing to do. Once you accept that, you're going to start looking for those areas to break, because they break with momentum very often. Otherwise, we'd be caught in a range. When is an area broken? Well, we know that if price reaches support and the triggers haven't broken, we're going to sit on our hands and wait for the reaction. Sometimes it'll be a bounce. Sometimes it'll absolutely smash through. But in the moment, I choose to do nothing because my path isn't clear. Same thing here. Price reaches resistance. All of my triggers are below. Why on earth would I trade into a line that may stop the market, that may take my money? Well, once the small triggers and the large triggers both get below support, support becomes resistance. The path is clear until you reach the next area. Once the smalls and large get above resistance, resistance becomes support. And guys, the path is clear until you reach the next area. Rule number 2 is met. This is the S&P. Price reached the yellow 1-to-1s. The triggers haven't broken yet. We're just waiting. We're waiting to see if they can get above here, or if these 1-to-1s are going to ultimately stop it and continue the market down. The reality is, I have absolutely no idea. But for the brand new user, there should be 2 choices. It's either a termination condition or it's a clear path. Can you guys give me a why in the room if you're with me so far? I feel like I'm trucking. I don't want to leave anybody behind here. Price reaches, sit on your hands. Guys, it's okay. Smalls and large break, man, let's look for opportunities until we reach the next area. And then this is the high probability trend trade scenario, guys. The only two options, right? You've already got momentum. You're like, man, momentum's easy. Separation, scissors open, holy smokes. Terminations aren't that hard. If I reach an area, every line says stop until it breaks. And guys, this is the most basic way of reading your indicators. But you're all brilliant, and I love you for that. Momentum can break areas. I made this picture yesterday for you guys because like I need a good visual. Your triggers will show you the potential. Your triggers will let you know if this area has the potential to break. So when the small triggers break through the area with momentum, but the larger still above, guys, this is the 50-50 look, and this sets you up for the 50-50 trade. 50% of my triggers are through, 50% are not. So you'll be taking an entry based on the potential of that momentum to break the area, guys. Rule number 2 isn't met, and this is what I really want you to understand. And I'm going to give you a plan to take this trade. Price reaches, sit on your hands. That can grow into the potential to break and then ultimately broken. It's like this little here we go through kind of thing. The first one says absolutely no trades. The second trade, or the second look says this one has the potential to break. Let's make it perfect so that we can take advantage. And the third one says, hell, let's find an entry because it's super, super clear. And guys, these are your options as a brand new user, and these are really the only options you're ever going to have, right? When it reached resistance, the triggers were way down here, and everyone in this room said, man, that's not my trade. And then it started to go up, and you're like, oh, look, the fib has the potential to break. Dag nabbit, I hit a 1-to-1. I'm sitting on my hands. And guys, now we have the potential to break this key area because of the momentum. We'll come back and look at it and see if it actually breaks. If the smalls and large get above. Termination conditions are the most broken rule because termination conditions force you to be patient. Termination conditions tell you, hey, don't go short, you hit a blue line. And you're like, man, I can't wait to get in the market. And then you hit another blue line and you're like, all right, this happens, right? And then you hit another one. And this is where new users start saying to themselves, this is absolute crap. How am I ever supposed to make money if I keep hitting these lines, right? And you get so caught up in this little 20-minute section that you believe there's never going to be another trade. Guys, this is 90% of your day. 90% of your day is not doing a darn thing. 90% of your day is sitting on your hands. The futures market trades billions of dollars every day. You need to catch $400 worth of those dollars in order to be in a six-figure income based on your trading, guys. $400 takes you into the $100,000 range. So it's okay to do nothing when there's nothing to do. It's okay to not be in every move. Every dollar is not your dollar. And very often, rule number 2, because it shows you exactly where the driving forces of the market are likely to make decisions, rule number 2 is going to keep you out of consolidation, guys. It's going to keep you from trading into these areas that may stop the market. Rule number 2 is your ticket to patience. But here's a reality. I don't want you to take my word for it. I don't want you to say, Mark said don't trade into areas. I want you to open up a large chart and I want you to see something. Pull back to support, stopped it cold. Pull back to support, stopped it. Potential to break, gave an untradeable bounce. I think that was potential in the moment, untradeable bounce. There's a divergence high, triggers don't break, right back to support. And rule number 2 is literally showing you exactly where this market is consolidating, and there's no reason to get caught out in these, guys. And eventually, things come to be. Eventually, things work out. Eventually, you're going to get that trade that you've been waiting for. And guys, patience is rewarded. This morning, I was in front of the market for a little over 2 hours. I took 3 trades when my rules were met this morning. And that's rare. Usually I get 1 or 2. I took 3 trades this morning between 6 a.m. Central and 8 a.m. Central, guys. And patience, it pays off. So I'm going to ask again for a why in the room if you don't mind. The large chart leads the way and it defines the momentum through strong trigger lines. Are there any questions? And then the large chart defines the areas that are problematic, guys, and it does that through a comparison of the triggers in the area. Momentum and a clear path. This is 2/3 of your advantages. And I'm gonna say it. Momentum and a clear path is enough. Momentum and a clear path is enough to build a trading plan that is consistent, that is profitable, that wins more than it loses, that gives you the advantages that you need. And momentum and a clear path is going to carry you to every other trade that you find. And it's crazy how this very basic lesson of this highest probability trade is going to open doors for you. Because once you have momentum and a clear path, guys, your entry area is going to change. You're going to see more opportunities. Initially, your entry is for the highest probability trade that you can take. But if I have momentum and I have my clear path, right? Large chart has told me, hey Mark, this is where we're going. We're going there fast and there's nothing in the way. Turn your attention to the small chart. Go to that small chart. Let's find an entry, guys. If I turn my attention to the small chart to look for an entry and I see 3 divergences in the same price range, 3 cyan lines from pivots at a low, 3 magenta lines from pivots at a high, guys. Divergence is a loss of momentum. And I don't think I said that earlier. So once again, I'm going to get artsy-fartsy, guys. If price goes down and up, that's a pivot. That's all it is. It just means that like that little V look was made. That's a pivot. That's a pivot. That's a pivot. That's all it is a pivot. Guys, if I get a negative number and a cyan line from these low pivots, if I get a negative number and a magenta line from these high pivots, and the negative number, guys, has nothing to do with anything. It's a byproduct of the calculation. What that line tells me, that cyan line at a low, that magenta line at a high, is it says, hey Mark, momentum is not following price. And when I lose momentum 3 times, guys, it may terminate a trend. It may create an untradeable bounce. It may create a little push in the opposite direction, guys. So if I open up my small chart to look for that entry and I see 3 divergences at a low or 3 divergences at a high, rule number 2 isn't met. This is the only time on a small chart that rule number 2 will not be met. If I have 1 divergence, couldn't care less. Momentum's defined on the large chart. If I have 2 divergences, doesn't faze me a bit. It takes 3 divergences to say my path is no longer clear. But if I don't have 3 divergences, guys, I'm going to refine my entry. I'm going to pinpoint where the market is most likely to continue. And I'm going to be so precise that I'm going to use a limit order to buy or sell a pullback in an area inside of triggers, guys. I'm going to wait for the market to come to me. And I'm going to wait right at a horizontal line on the small chart. Fibs, midbands, yellow 1-to-1s. But the key to the success as a brand new user, the easiest way to get where you want to be as a brand new user is to let those lines be inside of what we call favorable large triggers. There's this awesome phenomenon that happens with the large triggers in price, guys, and price returns to large triggers. It returns to the large triggers on the small chart. It returns to the large triggers on the large chart. So what we've done is we've taken the large chart large triggers and superimpose them on the small chart. These are called your synthetic triggers. And when your synthetic triggers overlap your large triggers from the small chart, you have the most concise point where price is likely to return. And then when you put areas inside of them, you've got a very small little window where the market is most likely to bounce and continue. So when your large and synthetic are overlapping one on top of the other, we're going to call it favorable large triggers. For the brand new user, favorable large triggers is the easiest entry. It's the easiest to recognize, the lowest risk entry that you can have. I'm going to show you the other side of the coin, but we're going to focus on entries with the best of the best first. Because the small chart price may retrace back to the large triggers. And I want you guys to really absorb this lesson and learn the language. And large chart price may retrace back to the synthetics. And I know that this is true. And the one thing that I can say without question is price may return to this zone right here. But I don't expect triggers to create a bounce. I expect areas inside of triggers to create a bounce. So the small chart has 1-to-1s and a fib. The large chart, or the large chart synthetics, are over a mid-band. So this red box is my little window of opportunity, my area where the market is most likely to continue in the direction of the trend, in the direction of the momentum, in the direction of the clear path, guys. And the tighter these triggers are, the smaller that window becomes. So when we're looking for a long trade, the first thing that has to happen is the large chart must have momentum to the upside. Rule number 1 needs to be met, guys. Then I have to make sure that the large chart has not run into an area, that it's not a termination condition. And once those 2 rules are met, once I have momentum, once I have that clear path, guys, very often the small crowd shows up to fight. And it starts with a reversal bar. The reversal bar signals the beginning of the pullback, guys. This is a loss of momentum. And this loss of momentum is everything I need to get back to my best of the best entry. So once I get a reversal bar, my job is to first remind myself this isn't my entry, but then to look for those favorable large triggers, large and synthetic. Are they one on top of the other? Are they wide, angled in the direction of the trend? Like 2 snakes riding piggyback, right? And I know that inside of this red box, inside of these favorable large triggers, I need areas. I need fibs, mid-bands, or yellow 1-to-1s, guys. Do not put all your eggs in the mid-band basket. I don't know why new users do that so much. Fibs, mid-bands, yellow 1-to-1s. They are all equally as important, but they have to be inside of triggers. From your highest point of support to the lowest point of support, guys, this is your window of opportunity. This is the point where the market is most likely to continue with the trend. This is the point where the small crowd is most likely to fail. But because the large chart is screaming to the upside with absolutely nothing in the way, your limit order to enter this trade goes a couple ticks above the highest point of support, which means you're going to see a market that's on its way down, and you're going to wait, and you're going to hope that those small crowds can get to you. And guys, this is nerve-wracking for the brand new user until you develop a little trust in this methodology. But this is your best entry. Not going to put it at the lower level because the large chart says up with ferocity. We're going to get in at the top, understanding that it may go all the way to the bottom of these triggers because that's where price returns, which means that anything below those triggers for a long trade, I call it the wrong side of the triggers. Because wrong suggests to me that I don't want to be in this trade anymore. Any line on the wrong side of those triggers, guys, that's outside of your window. This is not where the market is most likely to continue. And I'm going to tell you, once you get below these triggers, it's a crapshoot on where that market's going to bounce. It could be a fib. It could be an area on the larger chart. It could be a mid-band on the larger chart. Once you're on the wrong side of the triggers, guys, this is where the market should not go. If this is going to be one of those trades that's more likely to win. So in a short trade, rules must be met on the large chart. I have to have large triggers telling me that the smalls are below, that the momentum is strong, that the market is likely to continue down. I have to make sure that I haven't reached an area on my large chart, something that could create an untradeable bounce. And if that happens, I have to patiently wait for that reversal bar, that signal at the beginning of the fight. And guys, you're going to be chomping at the bit waiting for that reversal bar. You are going to be just in agony thinking that the market is running without you. And then just magically, there it is. There's the beginning of that fight. This is not your entry. This is the beginning of the pullback. This is a loss of momentum. And guys, if you're one of those people that like to jump in with momentum, this is a great indication that you should probably jump out and see if it becomes a trend trade. Once I get the reversal bar, I'm looking for those favorable large triggers, large and synthetic, overlapping, wide, strong, one on top of the other. And then inside of those triggers, I need an area. I need fibs, mid-bands, or yellow 1-to-1s. And in this case, I have a mid-band. And that's it. So that mid-band represents the point where the market is most likely to continue. So my entry is a couple ticks below that mid-band, making sure I don't trip over a couple pennies to save a few dollars. Guys, I don't want to miss this trade with every advantage. And if it goes and hits, I'm in the best trade ever. Any line on the wrong side of the triggers is where the market shouldn't go. Guys, this is not a part of the equation. Once you're up here, things have gone south. Your advantage is gone. So your ability to take, I don't know, a week or two, 20 days, whatever it takes. Once you can identify where the market is most likely to continue, guys, you can identify exactly where the market should not go. And that's your first stop placement. 4 or 5 ticks above the trigger lines for a short. 4 or 5 ticks below the trigger lines for a long. And guys, this is it. This is your first couple weeks with Nexgen. If all you do is focus on momentum, right? And just say to yourself, gosh, dog it. I'm going to get great in making sure that I know what momentum looks like. And then I'm going to take that and I'm going to get great at making sure that there's nothing in my way. And once I've got these two, I know that life gets amazing for the day trader. But I'm going to define my entry, because by defining my entry, it reinforces the lessons that not only do I understand where the market is most likely to bounce, I know where my stop placement goes so I can protect my money if things go wrong. And guys, anything that wins 70 to 80% of the time is mathematically obligated to lose 20 to 30% of the time. Taking a loss as a trader is not a negative. Taking avoidable losses, that's a negative. Trading without the momentum, trading into those areas, trying to take trades from the wrong side of the triggers and getting absolutely steamrolled, there is zero reason to take those losses, guys. So if it hits your stop, that's okay. It's a cost of doing business. It's a normal part of a positive equity curve. You will not win every trade. Write that down. I will not win every trade. Therefore, I'm going to take the trades that provide a statistical advantage. That's what we just talked about for an hour. But one of the wonderful things about the market is that with all that momentum and that clear path and everything doing what you need it to do, more often than not, you're likely to get a reversal bar in the direction of your trade. You're likely to get that down bar after they came up to get you. You'll be able to reduce risk a couple ticks above it, a couple ticks below it. Reversal bars in the direction of your trade will be your first stop movement, guys. It defines exactly where your risk should be. 2 ticks above, 2 ticks below. And that concept is going to carry you over to when your look isn't perfect. So I want to ask real quick, guys. We just spent 40 minutes, 30 minutes going through 3 rules, 2 charts, defining where the market is most likely to continue. If you're brand new, it's a little overwhelming. By day 3, you're like, oh my gosh, this is so easy. I can't believe I didn't understand it 3 days ago. And that's a pretty normal thing, guys. So if you are brand new, be okay being new. Are there any questions about momentum? I'm going to ask again before we go to the next one. Are there any questions about what it looks like to have strong trigger lines? That's usually the easiest. Look at that. It ultimately broke. Strong triggers broke the area. And now we're beginning to weaken. But we do have a clear path. Well, we did right until it hit resistance. That little tail that you see was a pullback on the small chart. I wonder if it pulled back to an area. Oh, it didn't quite make it. And then I got 3 divergences right at Fibonacci resistance. And look how the market is reacting. Pretty cool, right? So this is the easiest look. Pull back to an area inside of favorable large triggers. This is the best of the best, the lowest risk, the easiest to identify, guys. This is your goal for a week or two. Let's get good at this. This is not always the look, guys. Medium probability scenarios are going to be the trade that you see more often than not. Not perfect entries are going to be the entries that you're going to learn how to take, because they're not perfect more often than they are perfect. And one of the most common not perfect entries is what we call split triggers. And you guys are going to see this a lot. Everything says up, the path is clear, maybe it's a little early in the move, and my large and my synthetic are not overlapping one on top of the other. These are not favorable large triggers. Mark warned me about this. Does everybody remember that price may return to the large triggers, but price may also return to the synthetic triggers? That creates a lot of space between the 2 correction points. Is everybody with me so far? because that lesson pays huge dividends, especially if you remember that your stop has to go below the triggers, guys. That's a lot of risk. And if the market may bounce from a mid-band, but it may also bounce from a Fibonacci support inside of triggers, but my stop has to go below those triggers once again, guys, that's an enormous amount of risk. Why on earth would I put $400 to $500 on a trade, right? If I'm only trying to make a couple hundred. This is where the idea of a reversal bar pays dividends. And I want you guys to use the phrase, my entry isn't perfect. Remember that phrase, my entry isn't perfect. My areas are not very clearly defined. There's a big discrepancy between the 2 points that may create a bounce. I will, because my money is worth it, force the market to give me a reversal bar in the direction of the trade. I will force the market to give me confirmation when my entry is not perfect, because it tells me that it's at least trying to go in the direction of the trend, of the momentum of the clear path. And that reversal bar defines my risk. And that's the most important part, guys, is it defines the risk. It takes the stop from way down here and puts it below the reversal bar 2 ticks. So one of the best phrases, if I were you, I'd write this down on a piece of paper, maybe make a voice message in Siri. When my entry isn't perfect, it's okay to demand confirmation. When my entry isn't perfect, it's okay to wait for a reversal bar. But guys, it doesn't guarantee a winner, it just establishes your risk. If none of your rules are met and you take a reversal bar, you're still probably going to get slaughtered, right? Maybe slaughtered for a little bit less. So we got to study this. Remember, we got to learn the looks so that they become easy. We've got to be able to identify momentum quickly. We've got to be able to gauge that path pretty rapidly. And we need to be able to pinpoint where the market is most likely to continue. And guys, the easiest way to do this has nothing to do with taking trades. The easiest way to do this is to open up your large chart, spread that thing out, and say, let me find odds favorable momentum. Let me find that clear path or that potential to break. And when I have it, I'm going to circle a tail, because this tail is a pullback on the smaller, faster chart. This tail represents that fight from the small crowd. And if I open up a small chart, and guys, please don't get me on the idea that that's not the perfect look. I want you to recognize that you can circle these tails and see if it pulls back to an area. I had the low area here, I had the high area here. If you waited for the confirmation bar, guys, it's Shortsville all the way down to the third divergence in the same price range. So if I back up again, and this is Friday afternoon stuff, so it's not the best of the best, right? I'm just going to circle this one, and I know that it's into a fib, but I want you to see the pattern, guys. What you're doing right now is you're studying a pattern. You're studying the idea that price returns to the large, that price comes back to the synthetic, that you'll be able to define the potential point of correction and hopefully take advantage of it. And the S&P hasn't been giving us a whole lot. But that one still pulled right back to support inside of triggers. It just wasn't rules met. Maybe crude oil has something. Price reached resistance, my triggers didn't break. Does everybody see that as a termination condition? Even though we have momentum, we're doing live chart reads right now. This look right here says, hey, new user, please don't try to go long at the area inside of favorable large triggers. You don't have a clear path. Does that make sense? Does everybody see it? This is live. One bar defines trend, defines areas, defines momentum. Not only is this potential to break, but that's not even close to broken. No reason to take this trade, guys. And it might go up, but you don't need that trade. Look how when resistance broke, it pulled right back to it as support. Isn't that pretty awesome? You know about these areas. Sitting on the hands. It's okay though, right? It's okay to sit on your hands. It's okay to do nothing. Billions of dollars every day. And we'll see how that termination condition works out. But guys, that's it. That's the best of the best. That's what we teach for the first hour every stinking day. All you have to do is learn a couple looks, guys. To get to where you want to be, you've got to learn a couple looks. You've got to be able to recognize momentum quickly. But then you've got to couple it with whether or not you have a clear path. So the easiest way to do that is not to take trades. Guys, the easiest way to do that is to take pictures. Take pictures of what it means to have your rules met. So this is Chart Reading 101, the most ignored drill that I ever give out every day. Go take 25 pictures of strong triggers and weak triggers so you never confuse the two. Go take 25 pictures of a clear path and termination conditions so you never confuse the two. Go take pictures of your entries so you know exactly what it looks like, guys. But don't just take pictures. Annotate your charts with the whys. Talk about why it's momentum. Talk about why it's a termination condition. And you're going to fill up this 101 section, guys. And I've given you a huge head start. Get 25 of your own pictures in there. Strong triggers. I clicked on it. Let's see what strong triggers, smalls above large, space between, rule 1, momentum met. Wow, that's sure easy, isn't it? That's my look. That's always my look. Let me see if it's different on this one. That says strong. Holy smokes. Smalls above, large wide, in direction of trend. This is strong triggers. Isn't that amazing? Guys, that's always your look. Commit it to memory. Look at those weak triggers. All the way down to the mid-band. That was the technical term. That's the sound it makes when there's weakness. Do the same thing with clear path. Do the same thing with termination conditions. Annotate it. Create a connection between your brain and the look so you don't take that small chart trade when the large chart doesn't say go. Can I get like a, I don't know. This is where if I were behind the pulpit, I would ask for a hallelujah or an amen. You don't have to trade into these areas, guys. Your path isn't clear. Is there going to be another trade, or was that the last shot at going up for the rest of the day? What do you think? Do you think there may be another opportunity before this day's over? I mean, I get it. We're 50 minutes after the open on Monday. All the money's gone, right? No. Sit on your hands. You're going to get there. Maybe one more, right, Rob? So, guys, one of the things, go back and take these pictures. And I'm going to give you this as well. This is the high probability trend trade checklist. One of the things on your trend trade checklist, it's going to ask, is the market coming from a strong top or bottom? Was it a termination that reversed the market? If it was, guys, the strong tops and bottoms are the precursor for the highest probability trend trade you can take. They are not mandatory. You don't have to have a strong top or bottom. This is just me giving you some extra warm fuzzies. You have to be able to identify momentum. That's rule number 1, right? It's always the same. Both charts, small or large, separation. There's your termination. There's your potential to break. There's your broken. Guys, it's imperative that you know the difference so you don't accidentally take that trade right into a line. There's your entry short. There's your entry long. Tells you to wait for the reversal bar, what to look for, exactly where the market's most likely to continue, and all the way down to where you have to put your entry, guys. There's no reason to make mistakes if you do the study. You will make mistakes, but eventually you're going to know these, and you'll never say to yourself, oh, I thought I had odds favorable momentum. Guys, if you ever thought you had odds favorable momentum and you didn't, you refused to study. The same is true with terminations. The second page, guys, this is your checklist. Print it out. Put it on your desktop. Every time you take a trade, glance down. See if you're following the rules. See if you have that advantage for a trade that typically wins 70 to 80% of the time. Take the words off of this and write them on your chart every time you take a trade. You will never ask me, hey, Mark, was this the right trade? You'll say, hey, Mark, look, I had momentum, a clear path, in an entry area. This one didn't work out. Did I follow my rules the way I thought I did? And I'll say, absolutely you did. That's a cost of doing business. Never had anybody follow this to the letter, four Ys, area, and do worse than 70%. Yeah, Alan, I think everybody has that challenge with NT8. That's one of the reasons why my brother spent $500,000 building his own platform. Almost done, by the way. NT8 have something with the threads that creates challenges. There are ways, ladies and gentlemen, to get to the other side of those challenges. And Alan, part of that is every morning going through this. Where's it at? There's Ninja Trader 8 best practices. Making sure that you have fresh data. Making sure that you're getting rid... There it is. Where is it? Dun, dun, dun. Making sure that you're on the highest power. Computers running at 100%. Making sure that your clock is synced. And then every morning, I delete the cache and tick folder and I start with fresh data because corrupt data can create problems. And I get, where is it? They changed this up. Taking care of cache and tick, taking care of the temp folder, getting rid of the old recovery folder. Alan, unfortunately, there's challenges. The more charts you run and the slower your computer, the more likely it is to crash. If you draw on your charts a lot, it's more likely to crash. Ever since I upgraded my computer, I rarely crash. It happens every now and then. And I know it's a colossal pain in the butt, and that's one of the reasons why Nexgen's working so hard on creating this new platform with the same functionality but without the crashing. And it has been a fight, Alan, for years because NinjaTrader 7 doesn't do it. It's the exact same software, the exact same code. You crashed 4 times this morning. So guys, when I crash that many times, chances are there's something corrupt. There is something corrupt in a workspace. I had it last week where every time I opened my S&P, NinjaTrader crashed. So I went back and I deleted all my workspaces and I deleted all my templates and I reloaded the indicators, Alan. And it wasn't just that it was an NT8 restall, but it was also a full new workspace. And this takes like 12 minutes, maybe. Once you've done it once or twice. So what I would do, if it were me sitting in your seat, I would go through this process right here. And for me, this tends to keep me on the good side of things for a few days, a week, 2 weeks, something like that. Literally in the last 3 or 4 weeks, I've had 2 or 3 crashes. But they always wait for the classroom because I draw on charts a lot. You're welcome, Alan. And remember, too, you can always have Jason do a quick run-through on your computer and make sure that you're at optimal, that you're at the highest power levels and all that good stuff. So, nice to see you in here. So, guys, I'm going to give you that as well. And then I'm going to give you this bad boy. And this is my favorite. This is my baby. This is the KISS plan. This is the Keep It Simple Sunshine plan. So, for you guys that are brand new, you're going to see a lot of trades. You're going to see people taking things that don't make sense to you, that are outside of the rules. You're going to see people entering and exiting and it doesn't follow the plan at all. That's okay. They're just ahead of you. This is the stepping stone in your learning journey, guys. This is the plan that has been proven to win more than it loses. This is the one that builds the foundation that teaches you to read your indicators, guys. This KISS plan is designed to optimize your chances of success with the high probability trend trade. And then it's going to be through simulation, study, class feedback, and continuous practice. You'll be empowered to craft a plan tailored to your personal goals based on your experience reading the indicators. Guys, once you can read your charts, you're going to see things. There's a lot of opportunities in the market, but doesn't it make sense to get really good at a trade that's been proven to win more than it loses? Doesn't it make sense to learn how to read your indicators before you try to find all the trades? Doing nothing when there's nothing to do, guys. That's the first skill that's going to carry you the distance. So your simple plan for consistency says don't fight the large chart. There's no reason to fight the large chart, guys. The large chart is the large crowd. The large chart defines momentum, areas, everything that they want to have happen. And the surefire path, how to commit financial suicide, guys, is fighting strong triggers, trying to be the first one in. Trying to say, man, there's a blue fib here, I better go long, even though the momentum is down and the trend is down. Surefire way to get run over. The second is trading into those lines that may stop the market, guys. Trading in determination conditions is the most broken rule. This is the most lost trade. But Mark, the entry was perfect. But Mark, I had momentum. Damn it, Morgan. There was a giant red line that said don't do it, and you did it anyway. Stop it. Morgan is a fictitious name, not a representation of anyone in the room. Guys, don't fight the large chart. There's no reason. Define your entry. Get into the market where the market is most likely to continue, guys. And once you can do that, and I promise you, if you keep it simple and focused, most of you are going to have this within a week or two. Once you define where the market is most likely to continue, once you pinpoint that window of opportunity, you know exactly, precisely, without question, where the market should not go. Your initial stop will be 4 or 5 ticks beyond those trigger lines. Your initial stop will be where the market shouldn't go. Your initial stop will get hit 20 to 30% of the time, because anything that wins 70 to 80% of the time is obligated to lose 20 to 30% of the time. Rob, that was the Mark trade. I traded in the termination conditions so often as a brand new user with the software that my brother sent me a message. He's like, how many times are you going to trade into those lines hoping they break, giving your money away? And I said, dang it, John, I've got another 1,000 in me. And I probably did. But guys, this is your first stop where the market shouldn't go. And it's going to be, you got 2 options. You're either going to get stopped out, and I want you to learn to be cool with being stopped out of the correct trade. You never know what the market's going to do. All we're doing is trading patterns. But more often than not, you're going to get that reversal bar in the direction of your trade, guys. And that reversal bar will be your first stop placement or movement. Your new stop will be 2 ticks above the reversal bar or below the reversal bar in the direction of your trade. And then there's nothing to do. Roll back away from your desk, guys. Sit on your hands. Do anything other than get caught up in the small chart fluctuations that are going to drive you nuts. You're either going to get stopped out or your first target's going to get hit. You will never know which it's going to be. But the cool thing is this KISS plan was designed on purpose to get you paid ASAP, to teach you to take profits, to get you comfortable getting a contract out of the market. And that first target's $100 in your wallet. Instantly goes into the account. Guys, if you're a crude oil trader with a great entry, it's not uncommon for your first target to get hit and get the reversal bar. Once you get your first target hit, once you have that money, once those sweaty palms dry up and the butterflies go away, guys, your next stop movement is break even. Move your stop to break even. Take all the risk off of that trade and remind yourself, the only reason I went short in the first place is because the large chart was going down with momentum and absolutely nothing in the way. And I'm going to learn to trust this look to hit my second target. And you're either going to get stopped out break even, really doesn't sting too bad to take a break even, or it's going to hit your second target, guys. And if it hits your second target, it's only $200 away from your entry. Once again, we're learning to get paid. This is a $300 trade. This is a $300 trade with the advantage of momentum. This is a $300 trade with a clear path. This is a $300 trade getting in where the market is most likely to continue and getting out at $200. And this is learning not to give a flying dookie about what happens next. You just made $300 over the course of a couple minutes, guys. And $300, if that's the best you do every day, is a $75,000 year. I'm teaching a buddy of mine to trade right now, and we're talking about this. And he's like, man, I got to make this much every year. Like, this is my goal. This is what's going to replace my salary. And I asked him, I was like, well, how much do you think you have to make a day to get it? And he's like, man, I got to probably make about $1,000 a day. And I was like, you're freaking delusional. You don't make $1,000 a day right now. He needed $300 a day to replace the salary to go on and make trading a full-time business, guys. Once you're good at it, this range is much more likely. But remember, getting paid is the goal. Holding on forever isn't the best thing to do. Not getting out at key areas isn't the best thing to do. Define your entry, manage it. You will craft a plan tailored to your personal goals based on your experience reading the indicators that will change up your management plan. You're going to start to recognize that odds favorable momentum and a clear path has the potential to get to the next area, which means you're still going to get paid, because that's the goal of trading, right? Get paid. Every trade, get paid. The cool thing is, if you take $100 and you stay above this reversal bar, you're probably only risking 80. Absolutely nothing bad can happen to you. And very often, all that momentum pushes. You're going to change your management, guys. But in the beginning, keep it super mechanical. Learn how to get paid. And then once you've practiced and you're getting these entries and you're getting these exits and you're reducing stress and you're developing trust, guys, everyone in this room is going to say, I'm ready to go live. I'm ready to put real money on it. I'm ready to try one of those prop firms. I'm ready to put my wife's new car fund into the market. And guys, there's two things that you have to know before you get into that market, and it's not on simulator. You have to know why you're going to enter. It has to be clear. It has to be clearly defined. It has to be rules that have been proven to win more than they lose, guys. We don't trade gut feelings or news releases. We trade patterns that are repeatable, identifiable, and have been proven to win more than they lose. That's what the high probability trend trade is. But then you have to know why you will exit. And guys, management is 1,000 times more nerve-wracking than entries. Is there anyone that disagrees with that? Because waiting for the entry, you just can't wait to get in. But once you're in, now you've got something to lose. Now you hope it goes down. Now you're praying they don't hit your stop. Now everything that you understood about the pattern being proven to win more than it loses goes out the window. And you start watching small chart fluctuations, and you start hoping, and you start moving stops, guys. You have to have a plan, because rules remove the emotion. If I know that my pattern wins more than it loses, my job is to follow that pattern, to trade those rules. And if those rules aren't met, my advantage is gone. I have to do nothing. So keep it simple in the beginning. Learn the high probability trend trade. Learn what it looks like. Learn how to enter. Learn where your stops go. Learn how to manage it with the KISS plan. Very basic. As you grow with the software, you'll begin to see other reasons to exit. You'll find different ways to manage that trade. And then add the second trade. And that second trade is the 50-50 trade, that medium probability trade. And the cool thing is I've attached it right to the KISS plan. This is your second trade, guys. This trade is going to happen more often than the high probability trade. This is not a high probability trade. So this KISS plan for the 50-50 optimizes your chances of success with this one. What does that mean? This is the best way to take it. It's not the only way to take it. This is the one that's going to bring you the most success. This is also the plan that's going to keep you out of a lot of those 50-50 trades. So, from a strong top or bottom, you learn that over here. So if you skipped this lesson, you're going to struggle with the 50-50. Odds favorable momentum on both charts. We learned that lesson over here. If you skipped rule number 1, it's going to kill you on the 50-50. No divergence on the 5-1. This is the biggest killer of 50-50 trades. If you didn't recognize it from those 3 divergences, identifying those lines, you're likely to make a mistake on this trade. You have to define your entry, guys. The rules are different. The management is different. So learn this one, make it easy, and then add that one, and you won't have so much to think about. So, guys, that's my first hour. Every day. Kid you not. Every day. If you come back tomorrow, if this is your day 1, tomorrow you're going to be like, holy smokes. He said the same darn thing. So guys, I'm going to give you everything that I just shared. This is the Microsoft Word version coming in. There's 7 files. It is the trade tracking sheet, guys. This is chart reading. This is daily goals. This is exit conditions. This is the KISS plan. This is even my PowerPoint that I use to teach each and every morning. And I'm going to do the same thing in PDF versions for you guys that don't have Microsoft. So one of my claims every morning is that I will give you everything that you need to be successful with the software. I will give you everything that you need to be successful with the software, guys. You now have a plan that has been proven to win more than it loses. You have a set of rules that have been proven to win more than they lose. We've broken down each rule and given you pictures of exactly what they look like. I've given you a spreadsheet that has each and every one of those rules clearly defined. I've given you tools to study. I've shown you how to study. And the only thing that I haven't given you, ladies and gentlemen, is experience. I haven't given you repetition. I haven't given you the time in the market that you need to be comfortable and to learn how to trust these looks. That's the only thing missing right now. That's on you. And I'm going to tell you, I used to get pretty butthurt when people weren't finding success. And what I realized is that the average trader that I come across was very successful in a previous life, was at the top of the food chain, was the person that gave answers instead of asked questions. So very often, and this was my case as well, guys, it's difficult to place yourself back in the role of student. It really is. It's tough to do it. Do it. Post your trades, get feedback. Every time you post in the room, I promise you, it's like a private session. If you're struggling and you don't ask for help, that's your fault. If I take you to water and you don't drink, it's your fault that you go thirsty, guys. Nexgen has given you the greatest tool ever, and I firmly believe this is probably the easiest software to learn. The patterns are very recognizable. You've just got to practice them a little bit. This is like me handing you a $5,000 hammer. If you don't learn how to swing it, you're not going to be able to build anything, guys. And that's what the classroom is. 15 hours every week. My sole purpose is to give you feedback on everything that you see and everything that you do. And that's what the second hour is going to be. We're going to talk about every chart posted. We're going to identify momentum, clear path, and entry area. We're going to go back to these three things. So this is what I ask of you. Sid, Tracy, Don, JK, William, Steve, Diego, Vittorio, all of you guys. If you post in my room, I want you to talk about the momentum. I want you to tell me what you see on the path, and I want you to show me your entry and your exit. Don't only show me your entry, guys. There's too much information that happens after the entry that's beneficial. Show me the trade to completion, where you entered, where you exited. Feel free to tell me why. And what we're going to do with every picture that you post in this room is we're going to talk about your read on momentum, if it was correct, or if you need a little refresher on momentum. We're going to talk about your identification of the path, whether it was correct, or whether we need to talk about whether it was a termination, the potential to break or broken. We're going to look at your entries. We're going to look at your exits, guys, and we're going to talk about, was there a lower risk entry? Was your stop placement, did it make sense? Did you hold on too long? Did you get out too soon? And every time you post in the room, you're going to get one step closer, guys. And your spreadsheet has a room for your trades, but also for the feedback. So you've got to go back and you've got to start to study every morning what worked and what didn't work, what felt comfortable and relaxed and what felt forced. Set yourself up for the day, guys, and you're not going to have all this great information if you don't post in the room. So, large chart read. Do I have momentum? What do you guys think? New users, this is what we're doing right now. Do I have odds favorable momentum? Do I have strong triggers? Does this look say, hey, Mark, this is a market that's likely to push in the direction of the trend? And this is where, if you're not sure, give me the answer that you think, because we'll go back and turn it into a lesson. No. So Sakshi, you say yes, and Joel says no. So Sakshi, this is exactly why we do this. And I hope that, guys, some people hate to be on the wrong side of things. So there's two looks on trigger lines. When the smalls are above and away. And let's do this. Scissors open. This is strong triggers. This is odds favorable momentum. This is rule 1 met. When my smalls are inside of the large, this is weakness. Anything can happen. Rule 1 not met. And guys, this is your two options. So from this point right here until this point right here, rule number 1 is met for the duration. And now I have weak triggers and I'm right at an area. So these weak triggers let me know that things may not continue up, but it doesn't mean that they have to go down. It just means that my advantage of momentum is gone. Does that make sense, everybody? So in one picture, right, in one picture, ladies and gentlemen, we can go to that 101 section and I can drop that picture in here and add one more to strength because it was clearly defined. And I can take that same picture and I can drop it into weak. Because that one picture, no trades, no risk, nothing. I've just gotten a very clear picture of the difference between strong and weak triggers. Sakshi, does that make sense? Doesn't mean that it's going to go down. It just means that my advantage of momentum is gone. So this is where I ask again, do I have a clear path? Price definitely reached that fib. Smalls aren't through it. Large aren't through it. Well, now it went to the divergence high. Do you see how we've got some trouble? We've got fibs. We've got a divergence high. My triggers haven't broken. Guys, is it okay to sit on my hands for a second to wait for my triggers to break the area? Because right now, I'm giving up 66% of my advantages. 66% of the things that make me happy and excited to take a trade. Whoops, wrong picture. 60%, 66%. It's just not there. I'm going to wait a second. Every trade isn't my trade. Every move isn't my move. Every tick isn't my tick. Guys, this is part of your 90%. And there will be days where the 90% frustrates the ever-loving snot out of you. So red eye, there is a calculation that runs behind the scenes. It used to be Nexgen users had to do the math themselves and go through and look at these things. I'm going to the instructions real quick, and I'm going to go to the common terms. So when divergence is calculated behind the scenes, let me go. These are all common terms. There we go. So when divergence is calculated behind the scenes, what happens is, no, that is one-to-ones. Sorry. Did they put the wrong picture in? He sure did. The wrong picture's in. I need to get him to fix that. So are you familiar with MACDs? Have you traded before? Okay, awesome. So what happens, and here's one of the things I can do, because the picture is wrong, I need to get my brother to fix that. If I put MACD BB lines on this chart down here, and we don't need these anymore. It used to be that you had to have them in order to determine whether or not there was divergence. So when this retracement happens, your software is going to take your MACDs and it's going to do all the math from here to here to there to there. And if there's a loss of momentum via MACDs, you're going to see this negative number, but it's this pink line that's really important. This pink line gives you the visual that the math says, hey, there was a loss of momentum coming into this pivot. And it doesn't really affect anything. It just lets you know there was a loss of momentum, there was a loss of momentum. But what happens is when you come back to one of these lines in the sand and those rules for termination conditions aren't true, you can see that it happened twice, right? Rule 2, defining trouble. Support to divergence high to support to divergence high, and then eventually it breaks down. And as the market comes back, we're directly into one of those divergence highs again, that same loss of momentum point. So the negative number is a byproduct of the mathematics that go into it. That's all it is. And one number doesn't make it stronger, doesn't make it weaker. The number is pretty much inconsequential. Divergence either is or is not. There's either a loss of momentum or there is not. Does that help? Does that make sense? I get asked that question all the time. You're very welcome. And guys, when we talk about 3 divergences on the small chart, we're going to use the same recipe, small and large, get above the divergence. And once that happens, these three divergences are now in the rear view mirror. They're no longer an issue. So great question. I'm going to take a break. I believe in my heart of hearts that sitting in front of the computer for 10 hours straight is detrimental to all things that are good in life. So every hour I try to take a break. I go stretch my legs. I breathe deep. I pet the dog. I grab a drink of water. And I just get away from my computer for a second, guys. So that's exactly what I'm going to do. But when I come back, we're going to look at the pictures that were posted and talk about those advantages and look at the entries. And I'm going to tell you guys right now, there are not very many pictures posted. So I see about 20 people that have been with me over a year, and you're still in this room. Ask me a question. Show me something that you're working on. Tell me what you want to talk about. New users, if you want to readdress some of the advantages, post it in the room. Let's talk about it. Nothing is off limits except personal accounts and politics. Guys, go take a break. I'll see you in 5 minutes. We'll get going again. Back in 5. All right, guys, here we go. Time to look at charts. Time to talk. Um, Man, just for grins, give me a Y if you see how that weakness, and look what the market's doing. It might still go up. Who knows? I don't know. But I do know that my advantage was gone. I also know that every one of these lines is on the wrong side of triggers. So if I'm learning to talk to myself and say things like, hey, what are my advantages? I currently am void of momentum, nor do I have an entry area. And I have to ask myself, do I really want to enter the market with 66% of my advantages gone? My answer is no. You guys have to determine whether what your answer is going to be. But I say it every day. Once you begin to speak to yourself in terms of advantages, once you start talking and you're saying things like, man, I don't have momentum, and even though the path is clear, I don't know which one of these lines might stop it because, hell, it's on the wrong side. What's pretty cool is you avoid losers. You avoid losers that you don't need to be taking. And that's kind of fun. All right, Pete got us going. Guys, I'm going to remind you, do not be the trade police. Everybody's in a different spot. If this trade doesn't fit the high probability trend trade, try and learn something from it. Triggers rolled down, separated, odds favorable momentum, not a clear path, not at all. And Pete knows that I'm very willing to take pictures and turn them into lessons. And guys, let me know if you see it. This is the fib. Small triggers are through. Large triggers are not. This is never, ever, ever a clear path. This is a 50-50 look. 50% are through, 50% are not. This is the potential to break. This is not rule 2. Let's kill some grammar. But guys, let me show you something. On that KISS plan, it says, hey, you better come from a strong top or bottom. There's that termination that reversed the market. That's bonus points. And then when we come over here, entered at the pullback to the mid band. So split triggers. Didn't take this one on the reversal bar. Split triggers. Took it at the mid band. Knew where his stop needed to go and got out just above trouble. Not a high probability trend trade though, guys. This is a medium probability trade. This is a medium probability trade with a pretty rough looking entry. This entry right here, his stop really needed to be up here to be safe where the market shouldn't go. But that's a little bit of experience coming through. Nice trade, Pete. Show me a picture of what it looks like, Andy. Maybe it's a simple fix that I can help you with. Why would the midband likely hold? So you had one-to-ones, midband, and fib all inside of triggers right here. Nothing inside of these. This was your entry. Maybe you were grabbing coffee. But your stop goes right here, right? So you've already established a stop for a trend trade, Pete. This is one of the things that I look at. So if I take this trade, I've already got my stop in place from the rules met trade. Does that make sense? So my initial stop is about right here if I'm going to take that mid band on the way down. And I've got all these areas that already produced a bounce. So I like it. And then a couple ticks above support, it works out. So let's see, just looking for your opinion. I've noticed that no matter how good the large chart looks, as in this case, if it reverses at a termination condition, then any pullbacks to the mid band will usually penetrate it. So what you're saying, Pete, is that if you trade directly into a termination condition, you tend to get your ass kicked even if you enter at the mid band? Because it looks like you just said you lose when you trade into termination conditions. But you've got to have these realizations. I love it. And Pete, once again, I'm not worried about you. I'm not. I know that you have a plan, but you're absolutely right. Trade into a termination condition, you're less likely to win. Trade into a termination condition. They're termination conditions because they've been proven to stop the market more than they let the market go through. All right. Joel is next. Let's see what we have. Resistance holds 50-50 from a strong top. You get in right at the areas right inside of triggers. Divergence prints, you take your exit. This is beautiful, Joel. Guys, this is the KISS plan verbatim. This is a strong top, odds favorable, potential to break, no divergence, perfect entry, divergence prints, and it says manage that trade. Joel, you could not have done that any better. Outstanding. Where was this one coming from, Joel? Was it coming from a termination that reversed the market from a strong top? That's the part that you left out on this one. And usually that's intentional. When people do that, when they hide a rule not being met, and I'm not saying that's what you did, Joel, but that's what I used to do. Where was it coming from? I don't see any fibs up there at that roll point, which means it probably wasn't a strong top, which means that the first part of the rule wasn't met, which means it's less likely to work, but it's an intelligent entry and a reasonable stop if you were going to take a shot at it. But notice the difference. This one shows the termination, it shows the momentum, it uses the checklist. This one says, not so much. Guys, these are things that I notice because this is a defense mechanism. Honestly, this is a defense mechanism. When you suspect that maybe you didn't follow your rules as well as you needed to, guys, you won't take a picture. When you think that you broke a rule, you won't take a picture. When you lose a trade, you don't want to take a picture because you're like, man, I don't want to be reminded that I didn't do this as well as I could have. Look what happened. And now we have odds favorable. And now we have a clear path. And now we have one stinking line inside of triggers. Let's see what happens. Guys, give me a Y if you see the momentum, please. I want to make sure that I'm reading this correctly. Is that right? Momentum? Price didn't reach the area, so the path is clear. If I get a pullback to a mid-band inside of triggers, this is where the market is most likely to continue, so my entry is 2 ticks below it. And I know without question that if they give me an entry, my stop belongs somewhere about right here, initially. Does that make sense, everybody? That's how quickly your reads happen once you start getting good at it. Momentum is the first, path is the second. Where's the market most likely to continue? So here's the question. Does it guarantee a winner if I get filled in this trade? Is the market obligated to win? Is the trade definitely going to go down? Hell no. But this is a pattern, guys. Let me get 2 ticks below the mid-band. This is a pattern that if I go back and look at it 100 times, typically wins 70 to 80% of them. I'm willing to take this trade. I'm willing to accept the risk. We've got the KISS plan in there, so we're going to see if it gets us. I'm already out of pictures. There were 4 pictures posted this morning. That's a pretty good sign that the market's not playing nice. And guys, I've done everything that I can do. I have demanded momentum. I have insisted on a clear path. I have defined where the market is most likely to continue. That's it. It's out of my hands. I have to just wait. They either get me or they don't. I either win or I lose. If they fill this position, my stop will go where the market shouldn't. If they fill this position, my first stop placement will be if they give me a reversal bar in the direction of my trade. This is it, live market. Sid, does it make sense? Tracy, you feel good about it? Don, JK, Sean? You're like, oh, that's what it looks like. And look at this. This is one of the most common entries. It's starting to go down without me. Let me jump in right here. My stop still belongs way up there. Ah, Tracy. Try this again. I'm not sure why, Tracy, but it's asking me to log in to see your pictures. Darn computers. Heading back to 1986. Tracy, would you try to reprint that or repost that for me? Or maybe copy paste the picture and drop it in? For whatever reason, it's not letting me get to your link. Guys, remember, small chart fluctuations. I want you to see this on the large chart. We're at 1 bar on the large chart. That's what this box represents. This is all of the small chart bars that have happened so far inside of this 1 bar. And on this 1 bar, the momentum is still good. On this 1 bar, the path is still clear. All I'm seeing are these tiny little fluctuations, that little fight between the small and the large, guys. I'm not going to change my plan. There we go, Tracy. Momentum starts. I like it. Coming off the termination. Everything is good. 69.47 is right here, right? You get in. Stops where the market shouldn't go. Not enough room. 69.47 to 57. It looks like it made it. It looks like that was a $100 trade, Tracy. How did you pick 69.57 as where there wasn't enough room? That's just your first target, right? That's your $100, go break even, get stopped out. But that's the rules met again to continue, and sure enough it did. Does that make sense? Oh, no worries. So that's perfect. That was your first shot. You make 100, you get stopped out, break even, and then with a little confirmation bar, that was just your second shot to get up to the next level. Great trade, great picture. Oh man, they didn't get us, did they? Should I just jump in? I wonder if they're going to come back up to the area inside of favorable large triggers. Are my large chart rules still met? What do you think? Are my large chart rules still met for a high probability trend trade? Anybody? I still have odds favorable, right? And I still have a clear path. So until it hits that fib, guys, I'm not canceling my order. Because just because it started down doesn't mean it's guaranteed to go down. We'll see what happens. But that's a little frustrating sometimes. Oh man, I knew, and it just didn't work. Ah! Now that's not your charts though, Andy. You rebuilt everything? Yeah, I'd get with Jason. Jason would be the much quicker fix than me, for sure. I don't ever look at those logs. Man, look at that. They didn't hit the fib yet. This would be magical if they came up and got us and then finished the move. Smalls above the large. The trend is up, but the large triggers are down. The path isn't clear. Guys, this is a look. I'm going to take this picture. This is one of the patterns that you'll recognize. The more time you spend with the software. When price accelerates away from the large triggers, guys, and hits an area, and the large triggers are below this reversal bar marker right here, this is what we call the gap theory. And one of the most common things is that price returns back to those large triggers. The same thing that we talk about on entries. And what it says is don't go long from here, right? Whoops, wrong one. That's the go, not the stop. Don't take a trade until it closes that gap, because more often than not, that's what happens. That's a pattern. So no momentum up yet. Large aren't wide. No clear path. Let's sit on our hands. They're still fighting on the S&P. Guys, what do you want to talk about? It's going to be a long day. We got an hour and a half. And we could just trade live, right? But 90% of our day is doing nothing. Man, we may not get our trade. Son of a gun. Carn Sarnet. Dag nabbit. We'll see. Do I have room from 96.75? 92.75. Up. Termination condition. Shoot, dang. Have to cancel my order. Not a strong top, Joel. It didn't make that area. So when I don't have that strong top, this trade is less likely to work. Does that make sense? What's a strong top? It means that they hit that key area, and that's what reversed it. This was all of the buyers trying to get to that fib. They know where the fib is. And the seller said, guess what, buyers? We're going to push against you. We're not going to let you hit your target. And they didn't, right? And they established all this momentum. But this area of support, this mid-band, this is right where the buyers are most likely to say, well, we didn't make it here. Let's try and get back to it. And that's why these strong tops pay huge dividends. And then especially on the NASDAQ. Look how it came down right off of that mid-band. And it hit those small triggers up against it. And those acted as support. And then it hit those small triggers up against it, and it acted as support. It has to hit the area. So, Joel, when we talk about strong tops and bottoms, I love that you asked that. Thank you. When we talk about strong tops and bottoms, first it has to be a termination condition. Here's a little something for you guys to put into the read if you want. So first it has to be price reaches an area, because that's how we define a termination condition, guys. Price reaches the area. Once it reaches the area, all that says is no more strong top or no more long trades. That's it. It's a termination. If it reverses the market, now it's a strong top, guys. And that's the precursor to taking that 50-50 trade, is that it actually becomes a termination condition first. And I'm going to show you some cool stuff. Man, look how quickly they went down. Very often, when it's not a strong bottom, that mid-band, those fibs, and look at that, they continue the move to the fib. And then it goes, retraces to the mid-band, and it continues down, and they didn't hit their fib. And look where they came to, right at the point where the sellers stole their momentum last time. And we'll see if they're looking for that fib. They may be. But now I've got weak triggers and a clear path. So I'm 50-50, but I don't have any areas inside of favorable large triggers. Do you guys see how, once again, 2/3 are gone the same way they were up there? Are you starting to recognize that patterns can help create expectations, right? Patterns happen over and over all the time. If you're following the KISS plan, Joel, absolutely. If you're following that KISS plan, if you're saying to yourself, you know what, I'm not making money every day, I want to optimize my chances of success. If I take a 50-50 trade, I want to insist on that strong top or bottom. I want to make sure that I have a strong top or bottom. And then, Joel, on the NASDAQ, it's probably even more important. And guys, here we had no momentum, weak triggers, but we did have a clear path. We didn't have an area. Some of you will say, I'll take it with a reversal bar, so at least my risk is established if I choose to take this trade. But I've already given away 2/3 of my advantages there. Still a termination. Gap theory is still in effect. Guys, today is not the movingest day ever, is it? Today is not the most active day in the market. And then Joel, when you say don't take any, guys, I don't tell you how to trade. I absolutely, positively refuse to tell you guys when to take trades and when not to take trades. My job, I know you do. This is more for the class, Joel. I know you get it. My job is to help you read your indicators. My job is to help you recognize patterns. My job is to hand you a plan that you can follow. And even in a live market scenario, if I activate a limit order, it's not because I'm telling you to take the trade, it's because the rules are met and I'm looking to see if we can illustrate perhaps management or something. But other things that I'll do as well, guys, is I'll say, hey, look, I don't have a clear path and I don't have the momentum that I need and my areas are on the wrong side. And maybe I'll just jump into the market arbitrarily and say, guys, let's see what happens with 2/3 of our rules not met. And when I do that, I'm hoping to get stopped out. I'm hoping to lose. I'm hoping to develop a little bit of trust in the idea that believing in patterns is a great way to do it. And that's a great thing about Sim. Practice everything, right, Joel? Because the best way to take something is not the only way to take something. And that's one of the reasons why I showed you guys entries not only in favorable large triggers, but also outside of those favorable large triggers. And the whole idea, the whole key to this, you guys are forcing me into gum flapping. The key is to have a foundation, guys, to understand the basics and then each day and week compound from it, right? Stop creating the unrealistic expectation that you need to be the perfect trader because you started a demo. It's ridiculous. So for you new users, I blanket. Very conservative rules. Recognition of advantages and a solid plan that optimizes the chances of success as a new user learns to read the indicators. So for new users, all terminations are bad. Right? No momentum is bad. Areas beyond the large triggers are bad. And guys, these blanket rules are because it increases the likelihood of success with a new user. And they're not always bad, but until you have the experience to know when to use the exceptions, it's just safer that way. It keeps you on the good side of stuff. And just like anything, the more time you spend with it, the more you're going to see, and this opens doors for you. And I can tell you from experience that once you build that high probability trend trade foundation, you begin to see more patterns even quicker. One of the biggest challenges is when new users see older, more experienced users taking trades that don't fit the rules, and it creates confusion. Remember, guys, there's 41 of you in this room and everybody's at a different place. Why did they trade in determinations? Well, they didn't have momentum. They're breaking rules. Why can't I break rules? You can. But you don't have the reps to know when it's appropriate, guys. And then you grow a little bit, and then you start to see patterns. And then you learn your rules like a scholar, and you're talking about these advantages, and you say, wait, I've got 7 advantages and 1 disadvantage. Maybe I can find a new plan. Maybe I can create a new rule. Let me study this. And just remember that the process yields results, guys. And the results seem to follow. And the KISS plan is there to teach the process. So keep questioning. Look at everything. But it's not that I have a crystal ball, but I knew that because the large triggers were all the way down here, that market had the potential to come to them. And it kept me from trying to go long, right? Does everybody see it? It's 10:48 in the morning. We drew the picture that said that that was the likeliest scenario 10 minutes ago. This is patterns. I used to sit in my brother's class and would be absolutely floored. Because he'd say, oh yeah, market's probably going to go here. The market's likely to go here. The market has the potential to go here. And then Joel, remember that lesson? When it's not a strong bottom, they may be looking for this fib. They know where these fibs are, guys. We've identified where the large crowd's likely to make decisions. So we had terminations that said don't go long. We had no momentum that said don't go long. We had gap theory that said don't go long. We have direction that says don't go short. Smalls above the large says don't go short. And we're in this holding pattern because I can't find a clear advantage. I can't find a series of advantages that have been proven to win more than they lose. Therefore, I choose to do nothing. What do you guys want to talk about? Man, look at that. They were going for the fib. I said some of you would take a reversal bar. And there you go. Some of you wouldn't. For some of you, that's not your trade. For some of it is your trade. Let's go to language real quick, guys. If price reaches resistance and the trigger lines are all below, can we say that this is an area more likely to stop the market? That's termination condition rules. That's why we learn the language. Price reach resistance. All of my triggers are down and below. This is an area that's likely to stop the market. I can see it on my small chart. This is where, as you grow with the software, you say with that clear path, if the small crowd pushes in the direction of the trade because of this look, I'm willing to take a shot, see if it gets to the next fib. That's kind of the growth. That's what happens. Who has never posted a picture in the room? I think we should do that. Is there anyone that hasn't posted something? Do me a favor. Take a picture. I don't care what the picture is. It doesn't matter. Doesn't matter what the picture is. So let me see if I can find a picture. Here we go. Doesn't have to be anything, guys. Open up your TechSmith Capture and go snap a picture of something. There we go. There's my picture. This is my pet moose. Just kidding. And drop it in the room and let me know that you can get a picture into the room. Let it be your puppy. I love pictures of puppies. So Tracy, so even though it went over a little, is it still resistance? Where are we talking? Right here? I want to make sure that we're talking about. So Tracy, what are the rules? The rules say until the small and the large get above it, it's always resistance. Until both the small and the large get above this line, it's always resistance. The same way this remained support until right here. Once the small and the large got below, it ceased to be support. So yeah, these are, and you just opened the door for a pretty cool lesson. Guys, these are areas. And when you open your software, let me share how these areas come to be, how fibs are born, guys. When you open your software, the T3 Fibs Pro Trader, it analyzes data for the last 10 days. It measures every pivot, every swing, every up, every down. And there are literally thousands of individual Fibonacci calculations. And if you spent several hours prepping 10 time frames of data, you could calculate all these areas too. But why? John Novak's automated it. But the magic is it depends on two things, guys. Which lines are the most important and which prices have the highest concentration of the most important fib levels. So do you guys remember, this looks like Yar's Revenge from back when we were all 10 years old playing Atari 2600. So what happens is every line, Tracy, this fib is an accumulation of thousands of calculations. So if I'm a tick below it or a tick above it, I'm still in that area, right? And it comes right back to it. But just because it's resistance, it doesn't guarantee that the market will go down, right? We have a clear path, but we don't have momentum. I have a clear path. I don't have any areas inside of favorable large triggers. Do you see how it's not quite perfect? The momentum isn't the best of the best. The area is not clearly defined. And there's absolutely no reason, Tracy, to believe that this market might not go all the way up to this mid-band. And it could go all the way back up to these fibs. The reality is I don't know. So what I can do is let me show you how the chart reading starts going. I start saying things like this. Support broke, and I have a clear path down. This is just my chart read. My triggers are all below resistance. If price pulls back to that area, it's likely to stop the market. Rule 2 lesson, right? And then over here I say stuff like, it all says down. The large chart says resistance may hold. But since I don't have momentum on my side and no areas are inside of triggers, rather than hope resistance holds, I will enter short if I get a reversal bar. So what I've done here is I've taken, all right, the trend is clearly down. Every one of my triggers is below the area. If price reaches this area, it has the potential to hold based on rule number 2. I don't know where it may continue from, whether it's here or here. So let me force the market to go down in the direction of everything that the large chart says so that I can establish my risk 2 ticks above it. Does that make sense, everybody? This isn't a high probability trend trade, but this is a trade that eventually you may catch based on your ability to read charts. So it's not just that it reached resistance, it's an accumulation of different things that create an opportunity. These are up, those are down, smalls are up, large are down. Little indecision right now. We're going to wait for it to come out. Does that help a little bit, Tracy? Because you can go through and see, and it's kind of cool. Let's get out of the consolidation point. Everything goes up, resistance breaks, pulls back to the support. And it goes up, pulls back. And you see this a lot. Breaks through, pulls back. Breaks through, pulls back. Yeah, no, ask them all. Thank you. Breaks through, pulls back, breaks through, pulls back, breaks through, pulls back. And guys, they just couldn't seem to get above this one. And sure enough, it went down. Not a great top. Comes down to support. They come and retest the support that became resistance. And that's where it goes down. They did it right here as well. Pulls right back to it. And it's freaking amazing how powerful Fibonacci is. And once you get comfortable with your rules, guys, you're going to find ways to take advantage. I appreciate that you're asking questions, Tracy. These are the days where I send my brother a message and say something clever like, man, this was a hard day to teach because no one said a damn word. Resistance held, gap theory, made it through, trend is still up. Don't have momentum because the small triggers are on the wrong side of the large triggers, which means I don't have momentum. I do have a clear path. Everything says down, but I don't know if this mid-band's going to hold. I don't know if this fib's going to get it. So do I try to count advantages and take it with a reversal bar? Or do I just sit on my hands and wait for it to be better? And that's up to you. And that is up to you. All right, it's 11 o'clock. I'm gonna go take another break, guys, because it's easier than sitting here trying to keep talking when I don't have anything to talk about. When I come back, I'm gonna start going through pictures that I have. I'm gonna start going through Word documents that I have. I'm gonna give you a working tour of YouTube. And Sid, we'll start with your picture when I come back. So I'll see you guys in about 5 minutes. Go stretch your legs. Final hour. Sid, let's see what you did. Woo! All right, Sid, here's what I need you to do. This is not the right look. And guys, this happens on Monday sometimes. And I don't know why it happens on Mondays, but it does. But that's a pretty wonky looking chart, right? Are you with me, Sid? I want you to right click on your small chart and reload all historical data. And that should make it look a little more like it's supposed to look. That is something that happens for whatever reason over the weekend. I have to go through and fix every chart Monday morning. And I don't know what it is about NinjaTrader's data that does that over the weekend. But reloading all historical data will usually get you right back to where you want to be. And guys, remember, if you don't see smalls, large, synthetic with a good flow, it's very rare that they'll ever run parallel to one another like that. Good stuff. All right, guys. So I'm going to give you this because I believe in this path, because I fought this path wholeheartedly in the beginning. Guys, to get to where you want to be, to minimize your learning curve, post pictures of your trades in the room. Guys, every trade, win, lose, or draw. Because if you win and the rules are wrong, you may have a short-term victory but a long-term failure. And how will you know the difference? So to be sure, you need feedback. And we are here to help. I love giving feedback, guys. It's my favorite thing to do. And if you're on the simulator, if you're participating in class, guys, there's no risk. You can't lose money. You just need someone to tell you what you did, right or wrong, guys. And that's what I'm here for. And that's 15 hours live every week. You will get feedback. And I'm going to tell you right now, you guys with thin skin aren't always going to appreciate the feedback. You're not going to enjoy hearing that you got lucky. You're not going to enjoy hearing that you traded in the termination conditions, that you didn't wait for the correct entry. And that's okay. Woo. That's interesting. What on earth? Belt, do me a favor. On your large chart, click on it and hit F5. And that reloads and rewrites. Yeah, it's got gigantism. F5 will rerun the Ninja script. Let me know if that helps. I've never seen that before. So right click, Sid, reload all historical data. You've already reloaded historical in Ninja script and it hasn't changed, Belt. Build a new 13.2 chart. Do you know how to do that? Just build a new one and see if that prints up right. And if it doesn't, that's where I would say go knock on Uncle Jason's door. That's wild. I've never seen that before, but it doesn't look like it's getting any data. You guys remember when I said you would understand where the market is likely to go once you learn how to read your indicators? Does everyone remember that? Because right around 1050, we said that because of the bad bottom, because of the gap theory, the termination, they may be trying to get to that fib. That's when we put the box on there. And now, 20 minutes later, almost, they're trying, aren't they? Isn't that cool? Patterns, guys, they just repeat themselves over and over and over. Steve Diego, you have so much on your mind. Just hit send, man. Weak triggers. Triggers don't match the trend at all. We'll see what happens. Let's see what else I have for you guys. I like this one. This is the Mark Novak story, guys. This is my biography. For you newer users that don't know, I'm about coming up on 5 years with the software, I think. In 2020, I had my second spine fusion. Took me out of my career. My brother says, man, it's time. It's time for you to learn the software. It's time for you to start day trading. And I started learning the software, and I loved it. I loved everything about it. It looked like fun. And then about a week or two in, I realized that there was a lot of work that had to... there's a lot of work that had to be done. If you get parallel triggers, mid-band separated, set the number to 9. I've used that trick, Steve, on market flow, but never on the big charts, so thank you for that. Everybody that starts a demo says, man, this looks like fun. It's like a video game, right? And then you sit in class for a couple days and you're like, wait a minute, I have to learn things. Of course you have to learn things, guys. This is the potential for millions of dollars a year. There's people that make it all the time. And you've got to get good at some stuff, right? And then you're like, well, I'm not sure if I have it or not, but I'm just going to keep with it because this guy's convincing. We'll see. And then right around 30 days, we decide that we're brilliant, that we've got day trading figured out. And at 30 days, this is where a lot of people go live. And guys, this is my story. This is literally my story. And at 30 days, I went live. And when I went live at 30 days, there weren't these prop firms to where you could blow out and it only cost you 50 bucks. I lost $5,000, guys. And I lost it over 21 trades over the course of about 2 hours. And I had no idea why I had entered, why I had exited, why I lost, what went wrong. All I knew is that I wanted to get paid. I thought I was a badass, and it ate my lunch instantly. And when this happens, if this happens, and it happens to a lot of people, it's okay. It's a part of it. That's why we stay on simulator until we feel like we're ready. You're going to hit the I don't know shit stage, guys. And once you hit this stage, once I hit this stage, what I had to do, and my only option, so that I wouldn't quit, and I wanted to quit. I get letters from people that want to quit all the time, is I went back to this very simple process. I'm going to post my trades in the room. My brother taught the room back then. And I'm going to fill out a spreadsheet. I'm going to start to learn these patterns. I'm going to start to learn these rules. I'm going to write my rules down. And I'm going to take pictures of my rules so I know exactly what it looks like to have my rules met. And guys, I did this for about another 60 days. And then I went live again. And the memory of getting my ass whipped, I started taking great entries. But then I had to work on a management plan. I had no management plan. And eventually, if you follow the path, you get to where you want to be. You begin to say things like, because this is a bad bottom, and this is a termination, and that's the gap theory, there's a really good chance this is exactly where they're headed. And it may not be a short trade for you, but it might very well be the avoidance of 2 or 3 long trades that didn't work. Does that make sense, everybody? Because there was the opportunity to try to go long here, and here, and here. And that pattern said, don't do it. Sid. So 8 range. Crude oil, last range 8, tick replay days. You can change that 10 to 9 or 11. And sometimes that'll fix what ails you. Under days to load, either go to 9 or 11. And I don't know why that is for the range chart, but it is. And I think I had to do it this morning with mine. Let me see. Yep. See, I had to change my days to load to 9. And then usually the next time, let's see if it'll reload at 10 now, after it's collected a little data. It may not. Guys, I used to think my brother had a crystal ball. Yep, see, it's not working at 10 for me. And I don't know why that happens. But if I go to 9, we'll see if it works. There it is. Ta-da. Guys, I was convinced that my brother had a crystal ball, that someone was calling him and telling him where the market was going. And the reality is he just studied the patterns. And the patterns repeat themselves all day, every market, every time frame. I don't care if it's crude oil, doesn't matter if it's the S&P. Guys, look at that. Isn't that outstanding? And that was a little pullback right to the resistance that was at the triggers, and sure enough, that went down. It's nuts. So we're just learning patterns. Guys, what do you want to talk about? I'm going to stop talking until you guys give me a question. We can look at the NASDAQ for you adrenaline junkies. I'm going to tell you, though, if you're not good at crude oil, if you're not good at the S&P, if you can't keep up with those markets, NASDAQ's going to eat your lunch. It's so fast that the time frames are like 3 times bigger on both. My large chart's a 34. My small chart is a 13.2. Josh, how are your entries coming? Tony, how's your study going? It's good to see y'all's faces in here. Wayne, you get this box with limits on market flow, and on the small, I do not. I have Chart Trader active on both. So look at, Wayne, look at your order quantity. So on market flow, it's probably on 1. Make sure that you've got your ATM strategy. They won't automatically go across. You're going to have to put them in there. So make sure that your ATM strategy is the same as your other charts. And watch that. Quantity 4, if I go to a 1 lot, now it's quantity 1. Now it's quantity 6 based on my ATM strategy. And if I have it where it's quantity 2, but I need it to be 4, I'm going to do something like that. So check and make sure that your ATM strategies line up, that they match. Look at that, guys. 50-50, divergence, divergence, divergence. Everything said, don't do it. Seriously, don't do it. Why are you doing it? Ah, now we have to take your money. Kind of crazy, right? It's all patterns. That's a NASDAQ. NASDAQ's fast. It is so fast. Termination, no momentum, but Mark, I see a mid-band. Doesn't a mid-band mean? Nope, it doesn't. Let's see what else I have. This is a pretty cool one. This talks about using micro contracts as you learn when you go live the first time. Prove consistency rather than worry about money. How you can take a beginning balance of $800 trading 2 micros, and if you can just make $40 a day, do it for a whole month. Prove that you can, right? That's $1,600 a month. And then do it for a second month. And then do it for a third month. And after 3 months, you prove to yourself you can be consistent, go to the big one. And that $40 a day turns into $400 a day. And do that for 2 months. And then add contracts and do that for 2 months, and add contracts and do that for 2 months, guys. And you can grow an $800 account over the course of a year considerably by taking the same $40 trade or $40 goal. That's a fun one. Whee! Another one. You don't think rules are important? This was created by a gentleman. If you've ever spent any time over in Traders Chat, you've seen Siva. He's been with Nexgen close to 20 years now. When he first started, he knew that following rules was probably the biggest key to success. And I'll stick by that 100%. Knowing when not to trade is more important than knowing when to trade for most people, guys. And he has violations. Miss a good entry, entering late, exit for no reason, locking in profits arbitrarily, exiting late, all the different things that new traders typically do. And if he breaks a rule, he walks away from his screen. He takes a timeout. I thought that was pretty clever. Give you that one. Wayne, did you catch a white bar trade in crude, or are you only trading NASDAQ? Because that sure looked like your trade. All right, guys, I'm going to mute my microphone. If you have a question, post it. I'll answer it. Post a picture. I'll answer it.